Hey guys, Paul McClain here, President of Family First Life, West Coast. All right, so you're sitting with the client and they say, you know what? I'm just thinking about going through the funeral home. My friend, my neighbor, Sharice, went through the funeral home. That's what I think I should do. That's what I'm gonna do. I've been looking at it. How do you handle that? How do you get them from the funeral home, let me just knock it out there and get a plan through them, to getting them to purchase a final expense life insurance plan with America through you? All right, so this is how you do it. First of all, you want to relate, right? First step with anytime you're going to overcome an objection, or not even overcome an objection, but you're trying to get a person from one thought process walking towards thinking your thought process and them convincing themselves that it's actually their thought process, right? And that's the whole sales process, is getting them to believe that they came up with the idea, the thought, and then they hold on to it and they fight for it and they defend it, and now that's their idea. So relate. I say, perfect. Listen, Bob and Mary, the funeral home, I've got quite a few clients that I'll actually, encourage them or tell them that that's the best bet for them. And it just depends on like health and age, if that's going to be the best policy for a client, because sometimes a client can't qualify for anything else, so they have to go to the funeral home because they'll take anybody. And let me just kind of break down real quick the way it works as far as risk and qualifying for a plan. The way it works with life insurance or anything that pays out a death benefit, if it's funeral, final expense products, anything like that, it's all based off risk. And so you've got really 4 different categories of risk. You've got low risk. Low risk is they're going to take really hardly anybody. You've got to be like the healthiest of the healthy. You got to have no conditions, no medications. You're that healthy. That's the low risk. Then you've got medium risk. Medium risk will take like diabetes. They might take say cholesterol, blood pressure, thyroid, all combined, because they're not really that big of a deal. They'll take some more conditions than low risk. High risk will take like heart issues, cancer, as long as it's been outside of like a 3-year window. They might take COPD, emphysema, stuff like that. And then you've got guaranteed issue. They'll take anybody. You could have terminal cancer and they'll qualify you. It doesn't matter what your health is. And see what happens for most people that I'll sit with, and I look at their coverage as a field underwriter, is that a lot of families, they're in the wrong risk class. In fact, LIMRA did a statistic, and it's a crazy inordinate amount, that most people, they're paying more for protection than they need to be, simply because they're in the wrong risk class. They don't have a bad policy or a bad company or anything like that. They're just healthier than the plan that they have is got them in, meaning that the plan they're in takes cancer, they don't have cancer. And so what most clients do in this situation is we see if we can get you qualified for a lower risk class. Let me ask you this, Bob. Do you have cancer now? You had a stroke, heart issues? No? Okay, perfect. So the good thing is this. We might be able to get you qualified into a lower risk class situation, which just means that you can leave more protection for your family. Any client that I sit with that has a funeral plan in place and they don't have terminal conditions, typically we can almost get them twice the amount of protection as they have through the funeral home. In the funeral home, all they're doing is they're saying, hey, for all your expenses, the casket, all that kind of stuff, it's going to be, let's just say it's $7,000 to do that. Then they give you a life insurance plan for $7,000. That's very high cost because they're taking anybody, so it should be. And when you die, that $7,000 just basically will cover the expenses based off what you want to have when it comes to your funeral or final expense arrangements. With the final expense company, they do the same thing. So a lot of clients I sit with that have a funeral home already, we can take them from like $7,000, and a lot of times they get like almost double, like $14,000. And so now what happens is when you pass away, that you go to the funeral home, you let them know you got a policy, give them the number, they'll contact America. America will go ahead and send them the check for the $7,000, and then your beneficiary gets the additional $7,000. So you're able to leave significantly more for the same premium. So it's always a blessing if you can qualify for a final expense plan that's not through the funeral home, because you can get a better risk class if you're eligible for that. And I say, does that make sense, Bob and Mary? And they'll say yes. So to follow kind of why I'm doing all that, I'm relating first, right? And in that relating, I'm basically doing what is opposite of what they expect. A lot of times they expect me to say, well, no, that's not the best thing, or that's dumb. I say, these are great plans. Funeral home's a great thing to have because sometimes that's the only thing that a client can qualify for. And at least they can get something in place and prepare to make sure there's no burden behind. So I relate to them. The next step is I go to the problem. The problem is most people, they're in the wrong risk class. Most people are in one of these wrong risk class. So after I explain that, I identify the problem, which is Lemur says most people are paying more for insurance than they need to be, not because it's a bad plan. Then again, I'm not beating it up. It'd be a great plan, but they're healthier than that plan is taking people. They're taking conditions that you don't have, right? So the problem, the solution is most people that can qualify for a plan that's not through the funeral home. What everybody does is we get them qualified, because what will happen is now they can get more coverage, and when they pass away, the funeral home will get the check from the carrier to pay off whatever the arrangements are, and the beneficiary is going to get that difference, which is that additional $7,000. Do you see how that makes financial sense, Bob Mary? Well, yes, I do. So that's how you handle that. And what it does also, anytime I get an opportunity where what can be seen as a negative, and the way I flip it into a positive is through this process. And what that allows me to do is let them know that I'm not this sales rep that they might identify me as, or think that's meeting with them as this sales rep. And I start to go over here to this, I'm the field underwriter. I'm not the typical salesperson you're meeting with. I'm the person that's a field underwriter. I'm the doctor. You're the patient. This has no benefit really to me, but all the benefit to you. It allows that role reversal. So that way, after I'm done explaining this, not only does it make sense, and I've now got them on the thought process of, oh yes, I need a final expense plan. I don't need to go through the funeral because I don't have cancer. It also leaves them with thinking, wow, he's the doctor, I'm the patient. He's able to give me significantly more value than he's getting, because he's not a sales rep trying to make a sale. He's a field underwriter.